What's up, traders? Happy Friday. It's time for the close of the week live stream, weekly close live stream. I'm asking the question rhetorically, should we be shorting this stock market? Should we be smarter than the people that are buying this new all-time high? Is it real? Is it real? Do we really want to start shorting an all-time high? Are we smarter than the people that are buying? These, like I said, these are rhetorical questions, and I actually have an answer for it. And we're going to look at some statistics, and that's going to come up in the live stream. So if you're watching later, just fast forward through the intro. And if you're watching live, just hang on. I'll be right back for the live stream. All right, all right. Looking good. Happy Friday to everybody. Hope you had a good trading week. I hope you're long the stock market. But I know a lot of people want to get short. A lot of people want to get short the market. This is the entire market for whatever reason. And that's why I wanted to make this this the topic of today's live stream. Because I've been doing this live stream. I've been doing my Discord. I've been having a community talking to investors and traders for a few years now, started in about 2020, back when day trading was all the rage. I've been doing it for about a decade before. And I noticed that as the market started going up, 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 after, let's just go back in time here. Let's clean up our charts a little bit. After the big old COVID dip in March of 2020, everyone just doubted that the market going higher was real. Oh, it's all money printing. Earnings of companies are bad. Donald Trump or Joe Biden or Obama or whoever is going to destroy the economy, blah, 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 blah. And yet it keep going higher. And then we got into 2021. And, well, all through 2021 kept on going higher. And finally, people let off their trepidation. They let off their fears. And that, ironically, but not really ironically if you study market sentiment, is when the market actually did the 2022 bear market. And then everyone assumed that, we were just going to keep going lower. And then 2023, last year, what do you know? Had a pretty shaky start. Came all the way up to the summer. October, the bears were really happy. And then here we sit today. We sit today breaking and making new all-time highs. Who'd have thought it? Who'd have thought it? With all the media FUD, with all of the bearish news that you see and read, who would have thought we'd be here today? You really got to pay attention to what you read in the media, but not take it to heart. Back when I worked in IT, there was a saying that we told each other: take not the words of thine user into thine heart, for their mouths spout naught but excrement. You can kind of translate that to basically the media is full of shit. They're going to talk about what people want to read. And what people want to read, what people like, share, and subscribe on, which you should do for the algorithms for me, is fear, uncertainty, and doubt. I know exactly how I could have 100K followers is if I just constantly put out content about how the market was going to crash, the stock market was going to crash, real estate was going to crash, and Bitcoin was going to moon. Those three things will get you a massive following on social media because that's what people really want to hear. But are they true? Sometimes, but oftentimes not. And we're very tuned to fear. If our ancestors weren't tuned to fear, then they would have been eaten by a saber-toothed tiger, and we wouldn't be here to be on these fancy glowing rectangles watching numbers that represent money that we then go and spend on goods and services in this weird modern world that we live in. So that's a little bit of esoteric explanation for why I think people are so clued into fear. But I wanted to take this live stream because now I can say by my rules that this breakout on the stock market is real. We need to have a talk. Because this has happened in my, I guess you could say, social media career of trading, where people start coming to me, and I really appreciate when people bring their ideas to me through Discord, through TradingView, and I'm not going to call out any names. I'm not going to throw anybody under the bus because who knows? Somebody could come to me with a bearish thesis on something. Someone could take out a put on the SPY, and they could be right, but usually not. Usually not. And there's a couple of anecdotes from the last couple of weeks that I want to share, and I share them. Like I said, no names are going to be said, but these are stories that I hear from people, and I appreciate them trying to flush their ideas out to me. And I don't tell them not to do it. I never tell anyone to do anything or not to do it. Hashtag this is not financial advice. I share what I think is valuable to me, to them, to you. That's why I do this. That's why I have my Discord. That's why I do these things, because I've been doing this for over a decade now. And I have made this mistake. I'm going to talk about that. I'm going to show you the mistake I made many years ago when it came to betting against the stock market. And I get accused by some of my Bitcoin friends, some of my Bitcoin Maxi friends, that I'm a stock market permabull. them being, of course, Bitcoin permabulls, like it's some kind of slight against me, like it's some kind of insult. Because a lot of them come from the opinion that they're in Bitcoin because the whole financial system that boomers are into and have built is just garbage. It's just all going to go away. It's all built on fake printed fiat money. None of it's real. I, it represents companies, okay? And that's who creates wealth in our economy. That's what the stock market is. It's convoluted, it's derivative, it's all these things, but it's still a representation, the best one we have, of ownership in companies that produce goods and services. Everything we buy, everything we appreciate, everything we like, there's money that goes into it because people work the jobs to bring those goods and services to us. They get salaries, they get bonuses, they get commissions, they get health insurance, they get vacation time. There's a whole economy behind this chart that we're looking at right now. And it's all aggregated with the top 500 companies that come and go depending on how the Standards and Poor's want to do it. But it's the best representation we have. And saying and reporting in the news, if you were to just write a headline like I'm going to do here, like everything is fine. This is not going to be a sensational title for any kind of news article or tweet. Nobody wants to hear this. Nobody wants to hear that unemployment is low and that's actually real. No one wants to hear that inflation is actually coming down. Everyone wants to say that the numbers are fudged. Well, okay, well, that's fine. What numbers are you going to use? Do you have numbers to tell me differently? Do you have evidence to the contrary? Well, no, but the Fed is, trying to keep everyone, long the stock market to keep it going up for all the boomers. You need to invest in crypto. That's the only asset. I come from these two different worlds. I can appreciate both of them, okay? And so I hear you. But what else do you have for us to represent, Coca-Cola, which produces, 0 calories soda, which could be bad for me. I don't know, but I enjoy it. But there's a company that produces it. They bottle it, and there's people that go to work every day and give that to me, and I pay them money for that. How is that going to work if we don't have companies, if we don't have organizations that do this? I can't melt down aluminum. I can't, create the drink by myself. We need companies. And fortunately, in capitalism, we have a way that we can invest in these companies that do it. Now, not going to name names, but I had someone earlier this week on my Discord say that they don't want to buy the stock market because it's too expensive. It's overpriced. But I gotta go back to that quote. I could look up who said it, but they never make the mistake of saying that a stock is too high to buy or its stock is too low and can't go lower. There's so many examples that we talked about in the last couple of years of that just being total wrong BS. Not BS. It's just a wrong way to think. We take our mindset of going to a yard sale where you can get something for cheap, something that has value, underpriced, and you feel good. You walk away like, ha ha ha, I got this antique I'm going to take on TV, and they're going to tell me it's worth $500, and I bought it for $5. Yeah, I'm so smart. People try to bring this to the stock market, but that's not how it works. That's not how it works. Companies that do well, they keep going up. And if you sit back and wait for them to do badly, it almost doesn't make sense. But let's actually look at some technicals. Let's actually dig into what I'm saying. And so there's a couple of things right now why I think that everything is fine, and I think this is real. There's a rule that I have when price breaks from a major level. So we have the last all-time high back here, back in January of, let me get my tool out. Back in January of 2022, everything was hunky-dory. We all thought it was going to be a continuation of 2021, but it wasn't. But we could have possibly known that. How? Because whenever something breaks from a major high, I want to see two candlesticks. If it's a weekly or a daily, preferably weekly, preferably longer term, close above that past high. And so in the last week of December of 2021, we got that. We got a new all-time high. Very reminiscent of the last 2 months that we had here. And then that first January that we had came up, poked its head above a little bit, and then closed that first week of the year down inside it. Bad. Bad, bad, bad. Bad no matter what, if it's the stock market, if it's a stock, if it's a crypto, bad, bad, bad. Because if something is bullish, if something is going to go up, you want people to keep buying it. You want this thing to stay bullish. People want to buy it at a higher price because they think it's going to go even higher. I mean, a lot of people, they want to get that discount, but really, why does someone buy anything at, in this case, why does someone buy it at 480? Well, that's because they think it's going to 500. Why does someone buy it at 476? Well, because they're looking for a pullback for it to go to 500. People, no one's buying something to sell it lower. No one wants to, buy high and sell low. They're all buying it with a future expectation of it going up. And if you don't get buyers, if you don't get people in here that believe in it, believe it's going to go up, if you don't have people that are buying it from the people that bought it before, you got a bad problem if you're long. And so not fulfilling that simple rule of 2 bars to close when you break a major high or low, that is what can lead to a major, major reversal. So the inverse to that is when you do, in fact, have a close above that level. And then we got that the second week of January. And then I watched very closely to see what the following week did. And now we have our third bar that is well above that level. Now, that's not to say that I'm not looking for even perhaps a pullback to confirm. We may get something like that. But at this point, if people are trying to short the stock market, it's an exercise in ego. It's because they think that they've read more contrarian news about how actually everything is horrible, everything is bad and going to get worse, and the stock market is going to crash, and society is going to crumble, and the dollar is going to fail, and they know it, and they're going to be smarter than all these fools that are just following the herd up. Maybe they're right, but they're probably not. Because believe it or not, and I hear it very regularly, I talk to them very often, you're actually in a herd yourself. And you may not know it because you're sitting there making these decisions, but you have to remember, you are the market. You are the market. You know that when you buy something and then you have a stop loss and price comes down, and let's say that you have a you buy it down here in September, and then you've got a stop loss on your trade. You put a little stop loss just below that low because you don't want to give very much, and you get stopped out right there at the tippy bottom. How many times has that happened to you if you're a trader? Trade long enough, it'll happen. Is it the whales? Is it the lizards? Is it the lizard people? Is it the big banks? Who is it? Who hurt you? Show me on this troll doll. Show me on this troll doll where the whale, where the big banks touched you. Where did they hurt you? Where? No. The reason you stopped out at the bottom is because everybody stopped out at the bottom. That was the point of maximum fear, basically. That's the point of maximum fear. Let me find something real quick. This is kind of the corollary. I mean, we gotta talk about crypto, don't we? I gotta find this. Hey, Jan, can you go back on the Discord and find me that screenshot that I posted 2 or 3 days ago of the maxis, poking at me, real quick? I appreciate that. So the reason I want to talk about that is because at points of maximum elation, at points where one can feel that they are really excited about their position, then you look back a couple of weeks later and you think to yourself, oh man, I should have sold it then. Well, that's because you're at the point of maximum happiness. And that's reflected in price. That's what price is. Price is people's feelings about the value of something. And you, as someone that's watching the price, you, that's someone that owns the asset, you are the market. Maybe you aren't the market all the time, but you're sitting behind your computer or your phone, however you trade, and your feelings and emotions are being felt. You're looking at the same chart. You may be seeing things differently, but a lot of people feel as you do because you know what? You're human. They're human, and we're all humans. And that's why these strategies, these price action studies, they don't change throughout history. Go back 100 years, read Reminiscences of a Stock Operator. The quotes in that book are reminiscent of the crypto traders, the crypto bros. People that are just, oh, this stock is amazing because reasons. Same thing they said about the various little altcoins that they had back in the day. So let me share. I want to kind of relate another anecdote from earlier this week, and this is in relation to someone on my Discord that asked the question, and I didn't tell them not to stick with their plan. Their plan, they said, was, I want to wait. The market's overpriced. I want to wait for a 5% pullback. That's fine, but I don't like arbitrary percents. The market doesn't. It knows where 5% is. But what's more important right now is that past all-time high level. What's more important to this price action, this rally, is going to be this past all-time high. The market knows where it is. Everyone knows where it is. And we may need to come back and confirm it. And so if one is looking for a 5% pullback from here, well, that's actually going to put you well back below the all-time high. If you start buying at 5%, price action is in a major rejection of the all-time high. So you violated a principle here that if something is bullish, it should keep going up. So an arbitrary 5% pullback is going to really destroy this breakout. Alternatively, what you need to do is you need to say, like, I'm looking for a pullback to this level, which is a 2.76 pullback. The time that we were discussing it earlier this week, it was about a 1.75%. Or, you could wait for it to come up and then at a future date, see about getting a 5%. But just putting an arbitrary number on it doesn't really work. I've also got a friend of mine who, since around here in COVID, he really, really doubted this rally. He really thought that this was just fake. It was just the Fed pumping money into it. And so when the stock market was in about, the SPY was about 300, maybe in the 200s, his target that he was telling me was he wanted to buy. He showed me a chart. He said, I'm going to buy SPY when it gets down here. I'm going to buy SPY when it gets below 100. I was like, wow, dude, you're going to be a freaking genius if that works. He would have been. He would have been a freaking genius if that would have worked out in his favor. And I think that, and he's a very smart person, smarter than me, higher IQ by far, very good at what he does outside of trading. But a lot of smart people, they really want to express their intelligence onto the market. They really want to take that ego position that everybody thinks this is going up, and I'm gonna pick the top or the bottom. Like I see it in my head. I read all this news about how bad things are, and I want to superimpose my negativity onto the market. Another person I was talking to, and I may have mentioned this in a stream a few weeks ago, right around the middle of December, maybe a little after Christmas, we were in this little zone right here of the S&P 500. Here's the all-important all-time high. And I know I said it on Discord. I know I said it on Livestream. I was like, look, guys, when you see something like this, don't go short. I know in hindsight, hindsight, we're all, no. This I knew was going to go up and break the all-time high. It might do a false breakout, but the way I explain this is inverse gravity, okay? Price is attracted to levels, major levels of support and resistance. It finds its way there, and when you're in this kind of interim phase where you don't know, you're not quite there yet. Like it got up to it, and it just kind of missed it. It's going to hit it. It's not going to miss it, okay? Because you've already got the bullish momentum that's going to push it forward, and it wants to get there. Because that's just if you do a major pullback off that level, if it really fails, then you'll see it. But a lot of people wanted to, or at least I guess it's the last few weeks of December, first few weeks of the year, a lot of people wanted to short this market. And I just knew that was not going to be smart, because you're going to get the force of inverse gravity. I know that's not a physics law, but it's just going to pull price to that level. And once it gets there, it's going to break it a little bit, because the market wants to hurt people, believe it or not. It doesn't have a mind of its own, but people want to fool themselves in this way. And so price is going to go up, and it's going to fake people out. That's the most likely thing to happen. And so you don't want to start shorting things there when it's close to the all-time high. You want to short it when it gives you some sign at the all-time high. That's what you want to do. And so far, we're just getting bullish signs. Now, if I'm wrong, I'll admit it. If this is some kind of a fake out that is just beyond my experience, fine. But you need to leave yourself open to the possibility that this is real. I know we've got elections across the world. We've got high inflation. We have all these things that the media tells you about every week, because they have to have you read. Like, they can't write an article that says everything's okay, market going higher, economy doing good. People are going to read that and be like, well, screw that. I need to. That's boring. I need to go watch some TikTok videos or something, or go read this person who writes this whole lengthy reason for why the stock market's actually fake. I want to read that. That's intriguing. That's intriguing to me. And once you read that, you're going to come back and be like, haha, I have discovered some secret knowledge. I am the brilliant one that is more informed of real knowledge than everyone else. And I'm going to go buy these puts and show everyone how smart that I am. That's what a lot of this comes from, actually. Or people superimposing their political views onto the stock market. I'm a very political person, but I never let it come into my trading. I just don't. I know people that sold all their stocks when when Trump was elected. I know people that sold all their stocks when Biden was elected. Everyone just assumed that the person they didn't like was going to crash their portfolio. And yet, what does the market do? Market don't care. Market, believe it or not, market doesn't care who the president is. They really don't. It really doesn't. It really doesn't matter. Oh, but Norok, reasons. Yes, reasons, but it doesn't matter. It doesn't matter. Have your online discussions, tell people they're wrong on the internet over here, and trade with just apolitically, and you're going to be so much better off. Now, like I said, I've got a mistake that I want to talk about. And by the way, as we get through with my little pontification, if you have symbols to look at, post them in the chat. First half of the live stream is for me to talk about the topic of the week, and the second part is for you guys, is for you. What I want to do with this, and it happens a lot. I've got a lot of friends that I've made through this, and I also have a lot of people that are on my community, which you can join with the links below, that we share ideas. I can't watch every single symbol. Just today, we're going to talk about RCL. A buddy of mine, he's not on the stream right now, but he's a regular viewer. Talk about his cruise line stocks. RCL did very interesting things. There were a lot of the earnings this week and this month so far that have made some very interesting moves, and we need to talk about those. But yeah, if you got questions, if you got things to look at, post it in the chat, and we'll look at that in just a second. Once I tell you why I don't go against the stock market. So let's go back in the Wayback Machine and go back to 2015. Now, I started my professional trading journey in 2013, January 1st, actually at the end of 2012, I quit my job in IT to pursue a career in professional trading. And so that was about right about here. And I didn't know anything. I didn't know anything going into it. But I remember about mid 2013, I was in an office. I had a mentor. I had a trading mentor that was teaching me Ichimoku and how to trade options, how to trade things just in general, and how to understand price action. Very valuable. Very valuable to have a mentor. And he one day in the morning, we were sitting there watching. He said, what he had done was he had traded back in the .com era. He was about a decade older than me. He was in his 40s at the time. He had traded in the .com era and got up. He said he even had a Lamborghini up around that time. He did that whole thing because he was in his 20s, and then lost it all and went hundreds of thousands of dollars in debt in that fall off of the .com crash. But he kept trading, and then finally in 2008, he was able to be on the short side with puts and make a bunch of money then. And so now that was who I was learning from. I was learning from a person that had gone through the highs, the lows, and then finally somebody that had been able to capture a really profitable bear market. And what he told me at the time in 2013, he looked at us, and there was a couple of us in the office. It was a really fun time. I really enjoyed having an office. Nowadays, nobody goes in offices anymore. That's why I started a trading community, is because I wanted to have people to talk with on a daily basis about trading. Trading is something that you do by yourself, but it's helpful to have people to bounce ideas off of. And so that's why I appreciate you guys watching and bouncing ideas off of me, because I get ideas from you. But anyway, in 2013, he turned his chair around. I remember he said, "This market is something I've never seen before." The market of 2013, 11 years ago, was truly unique. I mean, it just went up and up and up and up very, very gradually. Had a little bit of a bleep in October of 2014, but for the most part, 2013 to that point was the most bullish year in history in the stock market. I mean, maybe not percent, but it's just the consistency of it. No major pullbacks. And I was studying, and then price began, this is a weekly time frame, price began to sort of falter a little bit. And then comes August of 2015. Boom. I don't even remember the reason. There wasn't any real reason. Stock market just been going on a long time. And I had studied Ichimoku for a very long time. Enough so that I knew that when price and momentum got out at the same time on the weekly, I knew this was a short. This was, by everything I had studied for 2 years in my professional career, that point, I was smart. 2 years into being a professional trader, I was smart. I knew what I was doing. I followed the signs, everything I had been taught. And so I closed out of my stocks that I had in my portfolios. I went short the market because everything, I've been waiting for this to happen. This is a very different situation than shorting all-time high, by the way. I actually had my confirmation. And as this proceeded on for about a week or two, I felt really good about my position all the way into, 2016. But I wouldn't be saying this was a mistake if it wasn't for what came after that. And the market went higher. Now, that's not to say that I think that every single chance to short the market is going to be bad. I mean, after this point in 2016, we had COVID in 2020. But think about it. We're looking right now. Let me slow this down a little bit. This is 2016. There was some major political stuff going on right then, and everyone was sure. Oh, this was fun. Look at this right here. This right here was within this bar is November the 8th, 2016. This is right before it. See that pullback right there? See that little pullback, that 50% pullback in here? What was happening around that time? A lot of people thought, oh no, stock market gonna go down because political reasons. Whoa, I guess not. But what you need to understand, if you weren't reading the news or watching the news, if you weren't watching the news throughout 2013, 2014, 2015, 2016, 2017, 2018, and even 2019 up until Volmageddon, was every single day was bearish news about how the stock market was going to crash. Every bar that you see right here was a week of media writing articles about how the market was going to crash. And yes, it did go down at some points. But every single day, I would pull up the news and there would be some reason why the stock market was going to crash. And yet, it grinds higher. Now, is this possibly luring me into complacency? Is it possibly making me be a permabull of the stock market? Possibly. But once you've read this for several years, once you've read the media, once you have come to internalize their FUD and then have it make you make bad decisions, once you've done that, maybe you need to. Maybe you need to take puts on the market right now. Maybe you need to follow your gut. Maybe you need to actually bet against the stock market right now. Maybe you do so that you can also learn this lesson. But, there's COVID. There's COVID. Man, how many people were doubting that? I know some boomers, literal boomers, like not making fun of people that are slightly older than me, people that are retired and living on their, the cash they have saved, literally, that have been in cash. I know one that has been in cash since 2011. He is too afraid. He thinks that it's all propped up. Every year that I don't talk to him as regularly anymore, but I used to go to meetup groups, and he would talk about the latest government conspiracy that was brewing and how it's all just going to come down like a house of cards. It's all just going to fall. Every company is bankrupt because they have so much debt and they don't have any actual profits. It's all going to come falling down. I'm like, dude, like, at this point, he just can't. At this point, he has been living his latter adult life in fear of the market, and there's no way to change that. He's ossified. He's become stone. And you got to be nimble. You got to be able to say in the darkness of a bear market, hey, this thing's coming down to a technical level. Let me separate my emotions from this. Let me say, I am going to take a risk. It feels bad. It doesn't feel good to buy a bottom. But this week, now let's get into some actual recent times here. This week has been a very, very critical week because we had FOMC. Now, it's kind of a nothing burger. FOMC was very much a nothing burger, which everyone would have thought it would have been, or should have thought, because last year, everyone every week talks about what's the Fed going to do? What's the Fed going to do? And guess what they did? Exactly what they said they were going to do. Everyone's always trying to read the inflection in the voice of Jay Powell. They're trying to catch on key words and when they say certain words, when they don't say certain words, trying to get some kind of inkling for the future. But they're pausing. They're not going to raise rates. They're not going to lower rates. Guess what they're going to do next month? Probably not going to lower, probably not going to raise. And as people were waiting for this to happen, right before this week, this is the NASDAQ we're looking at, price made it's doing its bullish thing, pulling back to a 50% level this week. And then last Thursday, or this 2 days ago, on the lower time frames, there was a battle in the morning. A battle in the morning from that major 50% level and the FOMC news. This was the battle that was being fought. And by the end of the day, the people that were betting against the market, they fought, they battled, and they lost. and up it goes as the people that were short, that thought they were smarter than the market, have to close. Even survive this little pullback to retest right here.
That's what we like to see, Norak.
Hey, what's up, man? Yeah, it's quite an interesting week. But I mean, it's interesting from in hindsight. But I mean, in one can see it. One can see it if you remove the FUD. I bet you're high on the hog today, aren't you?
I'm just trying to keep it cool now. I'm done.
Yeah, yeah. Well, you deserve to give yourself a round of applause. By that way, the pullback this morning was to a 50%. This morning, let's see. Well, are you talking about the? Yeah, exactly. It was to. Yep. It was a
The
50%
trading
from earlier.
levels have been super mechanical the past month.
Yep.
Very mechanical.
Mechanical is that is the word
Mechanical.
for it. Yeah, it is. I mean, I mean, this one. I mean, sometimes. I mean, the ES has not been quite as mechanical because it did not. Let's see. Where's the chart for the ES? On FOMC, it did not pull back to basically this is the year to date move from 17th of January to here. It did not quite get back there on Wednesday, but Nasdaq was
Too
really
strong.
too strong. Yeah, that is definitely a way to interpret it because this ES, the S&P 500 as a whole, was more bullish actually now than the Nasdaq, and it didn't even pull back to its support.
We
Likewise, it
closed
also
at new highs on ES. We did not on NQ
right.
this week.
Today, ES broke above it. NQ did not break above it. So now you can definitively say that the S&P 500, the ES futures are definitely more bullish than the Nasdaq. Actually, probably has something to do with the individual components. But yeah, what does a
Rotation
golden pumpkin?
incoming.
Do what?
Maybe a rotation incoming for a little while.
I mean, I've been waiting for tech to rotate for years now.
I mean, it did. Meta
Tech.
was $90 or something like that. It rotated down. Everybody just
Let's
kind of
see.
forgot about it.
Oof, that's a big move. Well, that's what's really driving things up. Is I mean, how about that Nvidia that we were kind of making fun of
How
Peru?
about it? Well, Peru is. I'm not going to waste your time on Peru.
Yeah,
Peru is buying, but my man's saying that we're heading into a recession. He's buying a breakout. That's the two do not compute. It's one of the other, buddy.
maybe I can forgive that because the thing like one of the things I want to bring up is
He's he's
RCL.
full of crap.
RCL is if it. I was saying this to a friend of mine today, and I said on the Discord. If people really want to bet against the market, people really believe that the market is going to go down. What they need to do is they need to find individual plays. That way, just in case the market does not go to hell, something some beta, some actual like stock unique movement can happen to benefit you. Because if the market does go down, anything that you take short is probably going to go down. Okay, so find things that are showing some weakness. RCL is a good example. I want to see this thing pull back next week. Do a little pullback up to maybe like 127 because they had earnings and that's a pretty solid spike double top. I don't think I could draw a better short position than this. I mean this is a beautiful short position. So
I think this is not according to your drawing, but I think that oil is going to rally again, and that will drive that down more.
or oh because that's their they got to spend a
Uh,
lot on oil, eh? Yeah.
yeah, I said if we get below 72, I don't agree with that anymore. But right now, I'm thinking so.
Oil is definitely caught, but I think I would agree there. I'd say if it did not come down to test this again, if it holds here to go up, that would be a good bet. But I think you can already kind of see that with RCL, the price itself. Um, what else you got on your plate that you're looking at this week or next week?
Honestly, if next week I'm just trying to get out of all my as many of my longs as I can because I don't feel like taking many new longs. I guess I took a bunch yesterday, but that was more like a mechanical reaction from the FOMC dip.
Mm-hmm.
but I don't I don't really anticipate initiating a ton of new longs up here. I just don't feel like the risk reward is great either way unless you're already long
No, I mean
on most things. But
at some point in the indeterminate future, we need to come back and possibly even try to retest that all time high.
maybe, yeah. I think industrials, though, to answer your question, is I would like to look at industrials as like a next, if we are going to rotate, I think that's what I want to look at.
Like, what would be a stock in that? You think?
I mean, XLI, if you want to pull that up first, is probably like a good
Mm-hmm.
place to start.
Okay. Yeah, I haven't done sector rotation in a long time because it just hasn't really mattered with the market going up. Nothing's
Yeah.
really rotated.
No, no, but I mean, Meta blew it out, but other than Meta blowing it out and Amazon blowing it, they're kind of rotating tech, I guess is what I'm saying, right? They're wrecking Tesla. They pulled down Google really bad. They pulled down Apple pretty decently off earnings. Meta's up, right? Amazon's up. They're kind of rotating tech around,
Mm-hmm.
and semiconductors are holding up real nice.
So now that you
Um,
mentioned Google, I didn't really pay attention to that today, but yeah, this is an example of something that did not break out. That's bad.
yeah,
That's very bad.
yeah. I did
Like,
buy Google at 139.3 today,
mm-hmm.
um, but
Well,
I'll hold it
You're playing the trading game.
139.93.
Yeah, you're playing the
Yeah,
trading
I'm
game
streaming
though.
it.
Um,
Where did I buy that? Hang on a second. Let me look. 139.11. I got that today. That was a good one.
Amazon, I have to note, it continues to be the trade of the century.
That's of the century, no doubt. But
Pullback.
I just think I don't think tech's going to crash, but I think it's going to rotate around and money's going to go other places. That's my theory.
Mm-hmm. What do you think about this meme from this week that's been brewing of commercial real estate? That's a meme. It has, you've heard it, you've seen it. Everybody's talking about it.
I think I mean I think it's a realist. I mean, look, I'm not an economist. I don't really listen to that stuff.
Mm-hmm.
Um, I think I think it's a possible danger. I just feel like it's so obvious that if it was that real of a danger, everybody would already be panicking.
The thing is, I'm not really, I don't really get afraid of obvious things because
Yeah, it
everyone,
seems too
it's
obvious
too
for nobody to
obvious.
be reacting to it. Yeah,
The,
I,
the
I
thing that,
think NYSCB is that got beat up off of earnings on that news, and I think that one will probably set up for. This is probably not a Norrock
oof,
buy, but this is one that will set up
oof,
for nicely for a dip buy.
oof. Yeah. Well, the regional bank that I look at a lot because I have exposure to is Truist Financial. And while I'm long and remaining long because it still has a good dividend, I think it's very interesting that this week it hit perfectly. It kissed the 50% at 38.41. So I had a few of my friends that they kind of followed me into the trade because we picked it up back when banks were going to fail. Remember, actually not exactly because March of last year banks were going to fail, and then I waited for it to bottom out and then picked it up. I think around here in June on that pullback. I had to sit through it the rest of the year, but now it's coming up. But we got a bunch of dividends from it. But they were starting to ask me as it came up, around the 36 level, hey, like, do we take profit? And I was like, well, I'm holding it for the dividends, but if you must, 38.41. And what an incredible kiss of it did on Tuesday of this week, actually. And yeah, that's a good hit.
Check out LPLA is another regional bank. That one got that was an interesting one if you look at it on the weekly too. It's doesn't have the exposure to commercial real estate that other ones do. That's not a that's not a bad chart.
Mm-hmm.
That's a regional bank for you.
Yeah,
It's very wiki and
I would
heavy
have to
to
say
trade
this
though.
this goes along with my thesis that price is going to be kind of gravitated up to the high there. So yeah, that's a pretty good bet.
Yeah.
Yeah.
But I think to answer your question, I think industrials and contrary to what popular belief, I think financials still are are strong.
Mm-hmm. Well, it's because now they can charge money for
Yeah.
an actual interest rate. I've thought
Yeah.
I thought that for a long time. Oh, what about TLT? I want to
TLT,
get
I got
back in
long
it,
TLT today.
huh?
I got long there today. I got long there today.
I want to see it maybe 91.48. But yeah, I think I thought it was going to be the trade of 2023. Turns out it's going to be the trade of 2024 because we're still
Yeah.
it's bonds. I mean, it's lazy old people money, right? So like they operate just on a different time scale. You know.
Zoom in on the 30-minute on that one for like the
Oh yeah.
couple
Well,
past couple weeks.
pull back
I just
here
bought.
around.
Yeah.
Yeah, that's good. That's good.
So I have a so I got that, and then I have a theory. You guys, if you see me pontificating on uh, the 10-year spiked up really big today, which is supposed to be not good for equities.
Uh huh.
I think as long as it doesn't make, as long as we don't get back above like 40.86
Yeah.
on that, 4.0
Well, this is
4086.
this
So
this
not up
is
there.
this is a
Not up
speculative
there,
number,
no.
right?
Way further down. Yeah, down there. Like at the top of the wick of the weekly on the current week.
Oh, okay, yeah, the over 5%.
No, I'm saying as long as it doesn't get back up to 44.086.
44. Oh, breaking that high from back there. Okay, as long as it's
Yeah.
like a fake
Yeah.
out. Yeah, these numbers are all speculative because these are what people think the future is going to hold, basically, right? And what interest rates are going to be. Um, so they think short
Raise them
term is
again.
4%, 30-year is 4.2%. So it's not quite inverted at this point. It's not. It's
Yeah.
just barely the same. But I think at some points, depending on where you were this week or last week, you did have an inverted yield curve, as they say.
Yeah. I just think the 10 years got off this zone. It shouldn't get up any higher than it's been the
Mm-hmm.
past couple weeks, which means TLT will rip off.
Yeah. I mean, as TLT starts rotating in better bonds, I mean, I think that I was able to. I never made a video about it. Like Jen was bugging me too. I just didn't. I actually mainly reason I didn't want to like bring up my Schwab account and put it on a video. But I took out some municipal bonds here. Around when we hit the 5% on everything, and I mean they're up. Like the valuation of them is up, and plus they're locked in for 10 years, 5%, which sounds like boring money, but it works. It works.
Yeah.
All right. Let me get to chat because we're kind of coming up into the last couple. I usually do this for about an hour. My name is. I'm actually not from Romania or Moldova, although people have told me that Norak means luck in those languages. It's actually because a 15-year-old Norak thought that Ragnarok, the Norse war of the gods, was really cool, and so I just shortened the rag off of it, and I'm just Norak. So that's where it comes from. Let's see. What type of job in IT? Saul, let's look at Saul while I answer that question. I would build and maintain network infrastructure for small to medium sized businesses. Back in the old days, before the cloud, when people had to have their own server farms, every business did. Much more inefficient because now Amazon takes all that business. So I don't even know what I would do in IT nowadays, except help people set up AWS. But back in my day, we had Microsoft Exchange email, and we would have to set up their accounts and then clean out their PST files because they got too big. And then when the CEO he had to migrate computers, he would have a whole hard drive full of pornography, and I'd send him a text message like, "Do you want me to move all of your files?" And he would send me a simple yes. That was what I did in IT. No, that was, yeah, it was fun.
But it was though.
Yeah. Let's see. Casey, we'll look at yours in a second. All right. How does USO look to? We were just looking at that. Oil. What is my opinion of oil? Well, USO. That's really hard to look at. But I would just
You
look
just
at
gotta
oil itself.
look at CL.
Yeah,
CL.
CL
Can't look at USO.
or
You can trade
WTI
USO.
because WTI I think is better because it doesn't have that zero, below zero number. It starts
Hey man,
there at 812.
all I know is that 50% worked
Yeah.
on the zero.
Yep. Well, so just USO is going to be the same thing for oil. I'm looking at WTI right now. That 50% at 67 right there, that is support. And as long as it holds there, I'm going to say that oil is bullish. It's kind of slow. We've kind of found a little equilibrium, I guess, in supply and demand, whatever you want to say it is. But that, of course, is going to be the same thing that you're going to see on CL, and that's going to translate to USO. And so I'm going to look at oil, just like he said. And right now, you gotta be on the long side, but it's slow. I don't see it popping off anytime soon, but it can happen anytime. But bullish.
Oil's just not worth trading,
Not
really.
right now. No, it
People,
was.
for,
We had a lot of fun. Like, what is it? A year or two ago? Yeah, 22. It
I'm
was a lot.
still long on oil from 68.5 from a couple
Mm,
weeks ago on CL.
yeah,
But it's not this close this week was ugly.
it's not
So
good day trading. All right. Okay, so yeah, we're talking about the pullback of 5%. Obviously, the number was not so specified as you thought. My point was that in order to shop in the market, I need a value price. Totally with you. Totally with you. I just wanted to share, like, what. Well, we should probably talk more about that too, because I can always learn from other people's ideas as well. Let's see. But it was just a teachable moment about what I really think may happen on the S&P 500. Basically, I was talking about how if we look for just a sheer 5% on the market, this is from earlier in the live stream, that's going to put it well below the all time high. So what I want to see is more based on price action. All right, let's look at Casey stuff and start wrapping up. If you got questions, if you got symbols to look at, put it in the chat. Let me check on Discord right here. Let's see. Freedom. Apple. Okay, let's see. Apple. Apple's wonky, man. I really don't have an opinion on Apple right now. I've always had Google products, phones. I don't think I've ever actually bought an Apple product. And so I've been kind of always disinterested in them, even though they've been going up. I just figure that any tech-based ETF that I own is going to contain a lot of Apple, and so I've never felt the need to buy Apple itself. And so I don't want to be in it right now because this. I don't see a setup. I don't see a setup with Apple right now. It's not
quick
bearish.
thought on Apple. If you can get long close to 180, then you want to be long over 180. And if it's under 180, you probably don't want to be long.
Yeah, yeah.
It's pretty clear right now.
Because I've got it marked off right here. I mean, that's the past all-time high. I mean, it did my rule. Where this is a weekly, by the way. So this took all through last year. It got above it, but then it got below it, and then it got above it again, and it came back and tested it. So yeah, 182.94. That still remains like the level to beat, and it's like punching it, trying to break it, but it's holding because it's freaking Apple.
Yeah.
But I don't I don't want to buy it myself. Like it's just not.
For
It hasn't
the
pulled back to a good level or confirm.
No,
Yeah,
it's a day trade only where you're already long from lower.
yeah,
Yeah. It's not really worth shorting either. It's just
yeah.
not. The likelihood of it collapsing just seems it's always so far away.
This kind of
And
tech
for
price action, I got to talk about it. I got to hurt myself. We got
yeah,
to look at Tesla.
get it in there.
Jesus God. This thing's going lower. I mean, and I say that to kind of project. I'm really trying to project. I mean, our friend, who came in on the day of earnings, talking like Warren Buffett, like, oh, the company, this is a generational buying opportunity. I'm like, shut up. Stop with the optimism. Bottoms are not made on optimism. Okay. Bottoms are made on just abject is going to zero pessimism. Okay. So I'm trying to project that out. I'm trying to stop this thing by being as bearish as I possibly can to try to invoke that negative emotion that comes from a bottom. But it's just, I knew this was going to happen back at 215 when let me, namaste. So back up. We traded this back, or you, Manaconda, you got into this early back around the 100s.
Wait,
Yeah, back in January of 23, back when it was going out really low. And so it came all the way up here, and I got really active. I got in a short here, and I was able to capture, I think, a little bit of profit in here. Not very much, because don't bet against Elon. A small short. But then when it pulled back to 160, let's just go back here. I was able to put on, a trade. I was able to put on a pretty good position, not very big. You always wish that your winners were way bigger. But 160, people come on the Discord and ask me, hey, when should I buy Tesla? All through 2021 and 2022. When should I buy Tesla? When should I buy Tesla? I'm like, not now, not now. Finally, actually pinged the guy that kept asking me at 160. I said, hey, this was a beautiful, beautiful setup. It was not only a pullback to 50%, but it was also a Tingus and recapture at 160. Here you go, on a silver platter. Asked him a few months later, did you buy it? He was like, no, whatever. So my personal story is I bought a Tesla in July, but by this point, and I loved it. Fantastic, drives itself, great technology, excellent. I'm long, but I'm not going to buy it up here. So I wait patiently for it to come back to the 50% of this big rally, and I grabbed it sometime. What was it, in October at the 200? Yay! I'm a freaking genius, right? Goes up, but it doesn't keep going up, and this is deadly. If a stock is bullish, it should keep on going up. It should. It just, I know it sounds dumb. It's just a tautology, basically. Is something that means the same thing as itself. You saying it. One thing that I cite is Waste Management. This is a company that I've owned for probably 15 years, maybe more, since before I even traded. And then I bought more of it just to say to people when they asked me when I said I did technical analysis, they said, oh, well, if the price of shit is going up, you'd buy shit. I was like, yep, I own garbage. And that's Waste Management. This is a company over the long run that just keeps on freaking going up. It goes down like everything else in COVID, but
Eli Lilly is like that too.
Yeah,
Check that one
I
out.
mean
LLY.
these are things that you want to own. I know. Oh,
Oh,
good
that's
God.
hard to trade that one.
Woo! You
Just
just
got
buy
to buy
it.
it.
Yeah. So this is what you want your investments to do. I know that just sounds dumb, but think about it. Like, you don't want something that's giving you grief. You don't want something that's coming back down, back to your entry, making you like kind of question it. You don't want these things. You want things to just go. You don't worry about them. That's what you want. And if you can just get out of these things that give you stress, you have a much easier life. And that's what I should. I make mistakes too. I sat there for 2 weeks as this thing was coming back. I was like, I shouldn't be in this anymore. But then there's that other wisdom where you're like, well, let's just be Warren Buffett. Let's say that we like the company, and let's just be, let's ignore the price of things. Well, that was freaking dumb, because as how animated I'm getting about it now is I'm in the situation that I tell people not to get in the valley of risk. What is the valley of risk? The valley of risk is where something goes below a major level, and now you're in this zone where you don't know what's going to happen. You just know that you own it, and the price is at a loss. There's two things that are going to happen. Number one, you sell it. It goes up because, again, like we said earlier, you are the market. You got to the point of maximum pain, and you got out of it, and that was a low. Now you're not in it. You took the loss. You're a fool. Or you hold on to it with confidence because you like the company. Well, it's just going to keep on going down. It's going to keep going down way below what you think it should go down. And a great example of this, which may be the future of Tesla, is, in fact, Facebook Meta. I remember very distinctly this earnings report back in 2022, the beginning of 2022. I read people's comments on my Discord and other social media when Facebook came down and opened. Let me bring up a chart here. When it opened its price on earnings below that key 50% level, this is split adjusted, but of 260, that's not a buy. Stay away. This is bad. Bad. But I kept reading to people like, oh, Facebook. It can't possibly go lower. Well, that was not going to be fun, because not only did it come into this valley of risk where you don't know where it is. Remember, people own this thing at 240. It goes all the way down to 160. Oh, surely it's going to hold the COVID low. The COVID low is going to be where it stops, right? Oh, yeah. It will go lower than anyone thinks it will. And then
you cuz and I bought that at 98 and we sold it at like 150.
Yeah, because that's smart. But then what eventually happens is everyone pukes their position because holy crap, this thing's going to zero, And then now a year or two later, you're up at all-time high. And you're just going to have to sit for 2 years being pissed off at this thing. And so I'm preparing myself, I'm preparing my asshole for a sub 100 Tesla price from here. Why don't I sell it now? Well, that's why, like I said, if I sell it
You
now, it's
you
going to go
didn't
back
sell
up.
it yet?
No, I'm
Mm.
hurting myself. This is an exercise in masochism right now. It really is. I'm not going to make this fucking mistake again. No, it's
I just keep trying to buy it and then cutting half and then just trying to ride the rest and then getting stopped over and over again on this right now.
the
I think I'm not going to say anything because
no. Say it, dude. I've
you
beat
give
myself
people
up
bad
plenty on it.
ideas.
What?
I said I keep trying to buy the 82 to 84 area. Anytime it comes down 85, 84, 82, and like trying to sell half for a couple bucks because it keeps bouncing, just making higher highs. I'm sorry, lower highs and like similar lows the past couple days.
Mm-hmm.
If it doesn't turn, what I think is going to happen though is it's going to if it doesn't reclaim and to close a week over like say 195, 193, and like in that gap. If it can close a week in that gap, the big gap that's open now, I think it will go back up to somewhere, somewhere. If and maybe come down again, but if you start getting down below like 178, that thing is definitely going way, way,
It's
way,
it's
way
it's
down.
it's going below at 200.
Yeah,
It's going.
I keep.
It's going. I
I
mean,
think it. I do think it will.
yeah.
I do think it will. I wouldn't be surprised though if it ripped off a nasty rally first.
Maybe give myself out. Give myself an out. Maybe. I mean, what the reason I'm hurting myself is because it's not. I don't make the mistake of thinking that I'm like a Nostradamus. I know where price is going to go, even though I just said it's going below 200. 100. The problem is
You
this. The
you know
problem
where it
is,
went wrong is right there
yeah,
when that little hit from below to 228.
yeah,
That
right
little
there.
wick. Yeah,
Yeah,
that's the one. Yeah.
yeah. I mean, but this whole weak zone right here, when it was, it was. I'm sitting here like, okay, I know in my wisdom from doing this for years and years that if something is bullish, it should go. It should have just gone. We should be talking about 300, 310, whatever Tesla at this point. The fact that it came back to that level while also making lower highs, I mean, you just don't want to be in this thing anymore. And even, I would have been less upset. I would have actually not been upset because I knew exactly that this was a real possibility. The problem is you see these things after year, and you know that this is a very likely possibility. So that if you sell here and you miss a rally, you know that the other thing could have happened. There's an alternate universe out there where price went the other way. And so it's better to be out of it and not at all emotionally concerned with it, which maybe that's possible since I get into a Tesla every day that, I still think about it. But I can find my way back into it. I can find my way back into the stock. But now this situation isn't going to resolve itself quickly. It's not. This is going to be a year. Like what's going to happen here on Tesla is we're going to stay below entry. We're going to stay below 200 for probably the entirety of this year. It's probably going to keep on going lower. It's going to come back down. It's going to test 160. And it's going to make people think, okay, here it's going to hold. Then it's going to break 160. Then it's going to come to 100. And so the next year and a half, it's just going to be testing people that own Tesla, trying to get them out of their position. And then in about 2 years from now, suddenly electric cars are going to be the rage again, or something of that line, because oil is going to be higher. I don't know what the future narrative is going to be, but this is what happens. Okay, do you guys remember in 2021 where EV was that sell your oil company stocks? Do you guys remember that?
Maybe.
Do you guys remember that time when we were all supposed to sell all of our oil company stocks? I have this right here because I thought I was too late jumping into ExxonMobil back in February of 2021. That was when everyone thought that ExxonMobil was overvalued below its what's the word? What's the word for it? The where all the assets together are worth less than the market. What is it? It's where all your assets put together are worth less than the stock price. It's
Just look
capitalization.
at the candlesticks.
What about?
I don't look at. I don't know. I don't
Yeah,
know
yeah.
the
Well,
answer to that question.
it was the one time I've looked at that metric, but it was just rather perplexing to me that people were so bearish on that. Meanwhile, people were putting all their money into stuff like Plug Power. What was the Nikola?
Oh
Um,
yeah,
yeah,
classic.
Rivian. I mean, you remember? Do you remember when EV was just the thing, bro?
Yeah, Neo was another one.
Neo, what's going on? I mean, all these. I mean,
That's the wrong one. NIO.
oh,
Yeah,
okay, Neo. Yeah, I mean, now people are just bag holding, asking what the hell happened.
Lucid.
Lucid.
Isn't that?
I
Isn't
saw
that one?
Lucid today driving around. But
It's just yeah,
LCIA, right?
Lucid. Yeah.
What?
Ooh.
What?
Yeah.
I mean,
Time to get out when it's time to go.
this is why narratives are dangerous, man. I don't like narratives. I hate narratives. Narratives are
Yeah.
dangerous because people believe them and ignore what price is telling them. So, all
Another
right.
thought is before you log off is someone said that market's going to broaden out and all that. If you pull up RSP real quick,
RSP. What do you mean broaden out?
someone made a comment in chat about
Oh,
market broadening out.
uh huh.
You might take note that the broader market has yet to make a new high, and if you pull
Yeah,
up
the equal weight
SPX,
ATF. Yeah,
yeah,
yeah.
yeah. So the broadening out narrative, like I actually do think it's going to happen, but it has not happened yet. So
Yeah,
if you
because
pull up
I'm still
SPX or whatever, it's
I'm still sitting underwater on Pfizer and Walgreens. These Tinkers and recaps on weekly, because I'm trying to play them hitting major lows basically, but they're not doing the bullish thing yet. But we'll see, we'll
I
see.
think healthcare and industrials. They pull up CAT,
Ah,
for
yes, cat.
example.
Well, I'm definitely got shares of cat
That's
from
good.
back in September
CAT's
of
good.
2022. I still got.
Union Pacific.
Oh yeah. Well, hold on. I was looking at that.
Ump.
Oh, there's another 50%. Mm-hmm,
Yeah, it's a
mm-hmm,
good one.
mm-hmm. I mean, you had to get
Uber is
these things
actually
last year.
industrial.
Uber?
Yeah, it's
Uh,
industrial. Check it out.
oof. Yeah. Are they making
Yeah.
money? They must be.
Yeah.
See.
GE.
No, geez, not bullish.
Yeah,
Really?
GE is bullish.
Wow. I mean, that
I
thing's been
mean, yeah.
dead for
How far do you
years.
want to zoom out? But yeah, it's
Yeah.
past couple of years bullish.
Well, I mean, I just
Yeah.
remember years ago feeling bad. I'm thinking like in 2018, 19 terms because I was reading articles about how there were so many retirees from GE that were just sitting there like, ugh, but yeah, okay, good for them. Good for those boomers.
Yeah, I
Um,
do think a setup that I like right now is because it's anti-narrative is Boeing, which I bought at 200 a couple
I
times.
know. I'm proud. Well, I mean, I'm not your dad. Not proud of you there, but I mean, it definitely is contrarian to the narrative because there's so
Uh,
much bearish news to Boeing. I wanted to short it because I don't want to fly on their planes, but I didn't because I knew that was a bad way to base a trade. How about that hold of the 50% right before the plane
yeah, for sure,
blew out?
for sure.
Did it
Isn't it funny
stop?
how yeah, that's exactly when it happened. Was when that was the news hit on the day it hit the 50%. Actually, that was
No, no, no,
two
no,
days
no.
later,
Here,
but it was
here.
pretty close.
This is when it blew out. Is 3 weeks ago. It was right here. So I mean, it hit it.
I think it was over the
December.
weekend, wasn't it?
It was over
It
a
was like that's
weekend.
where
Yeah.
that gap came from.
Yeah,
Yeah.
well, I remember somebody was saying like, is it inside? I remember there's somebody asked on Twitter, is it insider trading if I bought puts? If I was on the plane,
On the
but it was it
plane.
was
No,
it
it
was
was
out.
close, buddy.
Yeah, I mean, you would have made some money, but no, it hit it before. It was just like when um was it not Raytheon but NOC Northrop Grumman. Now they've come back, but before October 7th in Israel, it had hit the 50%, and then this is that the attack basically. I mean, price dominates. I mean, price beats narratives by far. I mean,
Yeah, you're
these things happen before the news happens, basically.
absolutely. The best thing I ever did was I stopped reading and listening to the news for trading, and I do not do none of that.
Yeah, that's good. I mean, yes, yes. I tell
Nothing.
myself that I need to stay informed, but you're right. It's just so much misinformation out there that I think it may not even be worth it. It may not actually.
Yeah.
So, all right, let me start
Healthcare,
wrapping things up.
industrials.
Huh? Or you got one more thing to look at?
That's it.
CSX,
Healthcare,
Jen.
industrials, and that's it.
Well, I want to
No,
be in
there's just in general,
healthcare.
like
I
what do
want
you
to
want to
be in
be? Yeah.
healthcare for this massive transference of wealth that's going to be happening as boomers want to keep themselves alive. We all know it's happening. I just don't know exactly how to play it because it's happening on such a long time scale, like a decade. Like I mean, I think there is a realist, what is it, a REIT for retirement homes, but it hasn't
Probably
really
should
been
be. And
doing
I
well.
would definitely buy that.
There is one. It's just that when I've looked at price in the past, it's been bad. Jen, can you look that up real quick? See CSX. Yeah, CSX is another one um, that's a really good solid hold from back in 2022. Huh. That bear market we had in 2022, that was a good time to buy a lot of stuff, wasn't it? In hindsight, right? Remember that bear market? Hey, Beach Bum. Let's see. All right, let me go through your stuff, Casey. Casey's breakouts. Casey's breakouts time. All right, A&F, Abercrombie and Fitch. Whoa, holy crap!
Is that still listed?
It's right here, A&F.
Bananas.
Huh? That is that is a bullish stock. That is a big bullish stock. AME. Yeah, you got another alphabetic list, don't you? Here, AME. This one again. This one's one that I like. Got a little bit of hesitation here, pulling back, hitting the breakout. I like it. I like it. I like it.
You got
I
a
like it.
you got a nice breakout on CARR right now.
Carrier. Wait, what?
You got to zoom in. You know me. You got to zoom in on that one.
I don't see it.
If they can close above 757, it's just going to run away.
757. Wait, what's the symbol again?
That's it. CARR.
Okay. Okay. APH. 9 assisted living stock. Hold on, let me pull this up. APH, another good breakout. BKD, that's just alphabetically at the top. Sorry, let me take a break here real quick. So 9 assisted living stocks to buy. BKD, Welltower. I'll have to go through these and actually start setting some alerts. Speaking of alerts, I got an alert right as the live stream started. DVN thanks to Stone Pilot. Okay, so I think that's because this energy company has pulled back to this weekly level right here, this 50%. So this is one I got a note for the coming week. So 2/2/24. The Stone Pilot is somebody I usually see in my Trading View live stream. So hopefully you're watching right now. We are now at DVN 50%. All right, let's see. All right, but back to what was it, BKD? I'll bring it back up here. So yeah, I got to set alerts on these in TradingView. But yeah, I mean this is going to be a decade trade basically. So yeah, I mean they got to live somewhere, and they can't live by themselves, unfortunately. All right, 2 ETFs. That'd be a good thing for some diversification. All right, let me finish up Casey's list. We just got through the A's, did we, Casey? Yeah, so what you're going to see, breakout APAU, ARCB. What you need to do, Casey, let me recommend this to you, is you need to construct yourself a set of rules. This is good. I like this. I like it when something comes up and shows you where a level is, like on your, I think it was the APH above it. When something comes up and shows you where the level is and then pushes above it, that is an actual breakout. If you're making just new all-time highs, I mean that's going to look like something like Abercrombie and Fitch, like A&F. And at some point, this thing's going to pull back, and you don't want to get caught. But if you look at something like ARCB or something of the like, or
Have a
like
good
the
night.
stock market, then you're going to be in a
See,
situation where you've already had pullbacks, and now you got confirmation. What's up? Oh, he's out. Okay. All right, guys. Well, I think that Miss LTC. Let's see. Are you talking about Litecoin or yeah, you're talking about You think Litecoin, Beach Bum? You believe in it? Or LTC Properties? Oh, that's a REIT. That might be more on topic. Hard to know. Hard to know. Yeah, see, that's what I've been seeing with these REITs with this specific theme of assisted living is they're low, but that is maybe when we want to buy them, right? So I really think that these are something that you got to pull out on the monthly, and you got to say, I'm going to put this in my portfolio, and it's going to be a long term thing because the largest generation, aside from the millennials, but the largest generation in American history, which has the most wealth, is retiring. They're almost all retired now. They've been retiring for several years now. I think they started retiring in 2017, was it? Whenever they turned 65. Generational years are nebulous, but they got a lot of money, and they're going to have to live somewhere. They're going to need help because their kids, the millennials and the Zoomers, they can't even buy their own houses. They got a lot of house equity. We were just talking about this week on Discord the prominence of reverse mortgages being sold on places like Fox News where they watch TV, and also life insurance cash out plans. Essentially, say someone has a life insurance plan, they need cash now. People will sign over their life insurance to them, and these companies are playing the long game. They're expecting eventually these people to pass, and they'll get the full benefit of their life insurance plan for a cash payout today. And they got very smart actuarial people that tell them how to make money on that. Whole businesses are cropping up around this big pool of wealth that boomers currently have. And if you are young and you are still taking risk, you yourself need to be thinking in those terms that all this money has to go somewhere. There's going to go to their living expenses. It's going to go to their health, which is going to be getting worse and worse. And nobody wants to succumb to their health. And so they're going to spend a lot of money on drugs. They're going to spend a lot of money on healthcare. And it's kind of obvious. But then again, sometimes the obvious isn't. All right. We didn't talk much about crypto. Let me close out with that. I am still short Bitcoin. It's still a spike on the weekly at a major resistance level. I know I was just reading earlier this week. I'm in all of the Bitcoin maxi chats. I know I've been trading Bitcoin since 2011. Yeah, I went to the first Bitcoin conference in 2011, August. And the bullish narrative is that right now, the Bitcoin price is on track to do the same thing as it has in the past halvenings. They say halvings, but when you hear me say halvening, that's because I'm an old OG Bitcoiner boomer, and that's what we used to call the halvening, kind of like The Happening. That was a M. Night Shyamalan movie back when we watched movies in theaters. Anyway, so when I look at this, I can't help but notice that this right here, this was COVID of last year. Who knows? Nobody knows. But if you ask people on Twitter, they sure as hell know that Bitcoin is going to moon. And that overconfidence is what I am betting against. So, got to ask this week, why is my target all the way down here at the lows, about 18K? And that is really simply to make the risk reward worth it to me. It's not that I necessarily think it's going to go there. I just know that that's where most people don't think it can go. And that, if I presume that I'm giving this much risk, it can kind of dig, bounce around in here as long as it doesn't break that ETF high. That ETF launch high is the key element of price action. If it does break it, then it's going to invoke what I talked about earlier, the inverse gravity, where price is pretty much just going to be attracted to the all-time high. If it breaks the high from January, when the ETF launched earlier this month, or last month, earlier in January. If it breaks that ETF launch high, that's it. Up it goes, and I'm stopped out. I'm wrong, and I'll say it. But if it doesn't, if this whole halvening thing just doesn't really pan out as everyone's sure it is, they're going to be left asking a lot of questions about the narratives they've been memeing to each other over these last several months. And a lot of people say, oh, Bitcoin will never be lower than 30K again. That's like the max that people think it could probably pull back to. Okay, I'll take that bet. All right. Have a good weekend, everybody. Trade wisely. Open yourself up to the possibility that we're in a bull market. So, all right. Have a good weekend. Trade wisely. Bye-bye.